Hello friends, welcome to this session of Basics of Accounting by CA Shruti Sahu. Today we'll be understanding about the basics of accounting, wherein since you have to do the accounting, you all through your career, you have to understand what is accounting, how to do accounting. But before that, let's understand why we should be doing this accounting. Because if you don't know why you are doing the accounting, then it's very difficult to understand and to execute, because if the purpose of doing something is clear to you, then it's easy to learn, easy to execute, and easy to take out results out of that. So here in this session, which is a very simple, and in a very simple way, I'll be telling you the usage of accounting, how accounting is relevant, what are the uses of accounting, so that you, when you are actually performing an accounting, then you will be able to deliver what is required, because you know why we are doing it. So in this session we'll be understanding why we have to do accounting, what is the relevance of accounting, what is the basics of accounting. So let's start the with the definition of accounting. Now, if I'll say accounting is a systematic process. Okay. Now, what is a process? Let's understand what is a process. When we say process, it's a group of activities. Okay. Now, activities or tasks. Say, suppose you're doing one activity or one task, but when you are doing accounting, it's you're doing a process which is a group of activities that you're doing. Now, what are the activities that are involved? Is first is identifying, second is measuring, third is recording, fourth is classifying, fifth we will do summarization, sixth we'll be interpreting, and seventh is communicating. Okay. Now, accounting basically means you have to identify a business transaction. It has to be very clear that accounting is always done for a business. Okay. Now, it is not done for businessmen. Okay. So, you have to understand the difference between business and businessman. We will do accounting for business, for financial transaction, and not as a for a person or about a person. Okay. So, here, this accounting process, we will identify the business transaction. Okay. Then we will be doing the measuring. Now when we say measuring, what do you mean by measuring? Is measuring in the terms of money. Okay. So if you have to measure anything in term of money, then only that business transaction will be recorded. For example, you are purchasing, so you know you have purchased for 10,000 rupees. You have got R1 material for 1 lakh rupees. So this is what you have identified, that is a purchased financial transaction. And the second is you're capable of measuring it. If in case a transaction is not measurable, you will not record that transaction. Ultimately, it's important to quantify in the terms of money to record any transaction. For example, if you are appointing a very qualified manager, okay, and it's giving you a lot of benefits, but since it's not measurable in terms of money, we will not be recording this transaction, even though it is very beneficial for the company. Okay, so it's important for us that we understand that the transaction has to be measured. If it is not measurable, it will not be recorded. Third is recording. So what happened? I've given you an example that we have done a purchases, right? Now we have identified this transaction. We know that we have purchased for 1 lakh rupees. Now we have we have purchased for 1 lakh rupees. Now this purchase consists of R1, R2 raw material of 50 1000 each. Okay. Now we have to record this transaction. So recording means we will record this transaction in ledger. Okay, that this is the R1 transaction purchased for this much and R2 transaction purchased. So this is called as recording. Finally, we will book it. Now this type of transaction we'll book here. Now we will purchase, say suppose you have any other transaction, any other bank transaction, if you're just transferring the money, if you're selling, if you uh, have to purchase a furniture, all these are what? These are all our business transaction for which you will have different sets of books in which you will be recording these transactions. So recording is ultimate process wherein we have to capture the transaction and in our books of accounts. Once books you have created the books of account, okay, then you have to classify it. Classifying means one type of transaction is purchase, another type is sales, third type is you're purchasing assets. Okay, so there might be, always think for big organizations. Okay, so in big organization you will not purchase one material, you purchase hundreds of material, hundreds of product. Okay, so and even if you are selling, you may be producing out of the raw material 100 type of products. Okay, so it's not about one thing. So this raw material you classify in purchases. The second thing is different type of product which are sale are clubbed under sales. Okay, now for furniture, this and you have big offices. Okay, you have office in Pune, you have office in Mumbai, you have office in Bangalore, you have offices of all the equipments, the AC, the table, chair. This is about the office. You have manufacturing unit. You have n number of machine, packing machine, labeling machines. You have manufacturing machines. You have your storage places. All these are there as plant and machinery, furniture, equipment. All these will be classified as asset of the company. Okay. Now liabilities. You have loans. You have taken loan from 10 different banks. Okay, so all these type of loans will be classified in loans and under liability. Then you have creditors, you have purchase material, you have 100 type of vendors, so you have purchased from 100 vendors, so there are n number of creditors, so you are classifying as creditor and under liability, right? So what is this? You are classifying things. You're understanding which type of transaction it is and you're classifying it so that you can evaluate later how much is my creditors, how much loans do I have, how much interest I have to pay, how many assets I have purchased this year, how much sales I have done this year. All these evaluation require you have to classify things. To next thing is to summarize it. That means all the thing you have now classified, now you are summarizing it in the form of trial balance. So let me explain you, let me give you a simple example again. So all these will be considered as general ledgers. Okay. Say suppose you have done purchases, you have done sales, okay, you have purchased assets, okay, you have liabilities like creditor, loans. Okay, so this is what this will go in your GL account. Different accounts will go. Now in purchases also, you will have how much raw material purchased. Okay, out of this, how much inventory, how much is consumed, and how much do we have in inventory. Okay, in sales, how much you have sold, which product, P1, P2. Okay. Assets, what type of asset? Asset, like if you have purchased ACs, you have purchased furniture. So these are what I'm giving you examples. You have purchased plant and machinery. Similarly, I've explained about liabilities, creditors, and loan. So all this will have its own GL, which is called as general ledgers. Okay. So each account will have its own ledger, like different sales, different assets. If we'll say we have accounts receivables, wherein with from whom we have to take the money after sales. So all these are ledgers will now we'll be purchasing different type of, we'll make ledgers out of these wherein all the things will be recorded. This ledger will now be summarizing into trial balances. What is trial balance? All the ledgers, say suppose you the ledger for purchases is for 10. Similarly for sales it is 20. For assets it's 50. Right? I'm taking a random example. For loans and liabilities, all these makes out to be 50. So all these is here it will show in line, like I have done purchases 10. It will show a statement where it will show a summarization. Assets 30, liability 50, like that. Okay, there will be a summarization, and if anything else. Now this will be classified. This trial balance will give you, and all the trial balance, the net will be nil. How it will be nil, I'll be explaining you in detail because of the balances allotted to them. Once we make the trial balance, then we have the, so I explained you that once we will make ledger, then we will have our trial balance, then we have our financial statements. Now financial statements means wherein we will have our profit and loss account, we will have balance sheet, we have our schedules, we will make cash flow statements. Okay, so these all are called as financial statement. Apart from that, we will have different notes to accounts also, as in what all policies we have followed. Okay, so this is called as, once we have recorded, then we are classifying and summarizing. Okay, so this all we have now understood, right? So classifying, then we are doing the summarizing into presenting in an understandable. This is very important form. Now, when we say understandable, now this is very important to understand here. Understandable means if you think a little big. You are working in India, okay, and you want to get some investment from US people. Now, you have been doing business from around 25 years in India, and you want to raise some money from US people. Now you have to present your business. You have to show how well you have grown during the years. What is the trend for revenue? See our balance sheet, what profit and loss we have made, what all um, customer base we have, how big clients we have. Okay, to present all these things, you should have a standard. because whatever if followed in India, if the same standard process, same accounting is not done in US and they are not understanding it, that means it will be difficult for them to understand what you are presenting. So there has to be presented in an understandable way, in a standard way, which is the people are able to understand, getting it. So therefore, it has to be in an understandable manner and useful for decision making, so that this guy can make a decision to do investment in India. Understanding? So here are the example which are the statements of summarization, which is used for analyzing and interpretation using the judgment and the planning in the future bit. So uh, this is what we have understood is after once we have summarized, we have to present it so that they can understand, okay, and analyze and then interpret the results. So this is what we have understand in the definition is that we will summarize, then interpret. Interpret means once you have shown, oh, I have earned this much, my graph is so well, this is my revenue graph. Okay, so why it is going upside, its growth is showing. So, and my profit is like this. Okay, this is my profit margin. What is this? This is showing that you are going upwards. Okay, so this is called as interpreting. A very important thing is communicating. Now you have done all these things, now you have to communicate what the financial information I explained you. If you can do it in monetary term, then only, otherwise non-monetary information is not coming from accounts. Like what group of people you have. Okay, so you have appointed a very intelligent person who has been coming into, who have been involved in many big businesses. Now he has become your MD. The strength of your that strengthened your business because you've got such great leaders. But accounting will not record it. Okay, out of records, it will not tell you how great our leaders are. Okay, because it records only the financial information of the resources available. Resources available means the assets, liability, income, expense, the resources which is available. Then where have you applied those resources? Like you have purchased and now you have applied to produce some product in your organization. And result achieved is by use of that asset is you have made a product and sold. You have done sales and you have earned out of it. It shows you ultimately profit and loss which you have incurred, because ultimately you're doing business, you have to understand the progress, you have to understand where your business is going. So you have to assess whether you have earned or you have lost. So earned or lost during the accounting period. Now when I say accounting period, it may be 1 year. Usually it is 1 year. In India it's April to March. Okay, in US it's calendar year, right? So this is called as accounting period. Okay, wherein you have completed one operating cycle. Okay, what is operating cycle is you have completely, you have put the product and it has come back as a sale and then it has given you back that money. It's called as an operating cycle. So So it you have incurred an profit and loss during the period. What is the value and the nature of assets, liability, and equity? Equity means capital. Capital means the money that is invested by the businessman in the business. So this is called as the accounting. Is this we have understand what is the accounting? Now let's understand, and we have understood the accounting and the characteristics of accounting. Now let's understand what is the objective of accounting. Now this is, we are explaining you why we are doing the accounting. Okay, why do you want to do the accounting? Why you are learning accounting? Okay, there has to be some reason, right? There has to be some vision, has to be some objective why you're doing. Okay, we are doing it so that we have all the records in place, whatever transaction happened. We have proofs, evidences available that you have done this transaction of this much money and this is the evidence. So you are recording everything so that in a systematic manner, so that you can facilitate to give the information whenever required to the users of the information, which can be government, which can be internal management, which can be the investor who have invested in you, which can be the loan, the people giving you the loans. Okay, all these people. So in simple terms, you are recording to share information. You are doing because you to assess whether you've earned profit or loss. Simple language. Okay, you are here to earn money. You're here to earn profits. So you'll assess whole through the year whether you have earned or not, right? Then you have to determine your financial position. Okay, financial position means if I have earned this much, what is the worth of my assets? Okay, I have purchased, or how much money do I have? How much cash do I have? What is the financial position I have, which is given by balance sheet. This is a statement. This profit and loss tell you statement shows you P&L statement or statement of comprehensive income tells you whether you have earned profit or loss. Now ultimately all this is for, we are doing to facilitate management because we are working for management to explain them the transactions, the growth of the business so that they can take decisions. Like say suppose you have earned very well and you want to give good bonuses to employees. So you should be presenting to them, right? We have earned this much greatly. Okay, this is the performance. This particular department had worked so well. So they should be given a little more better hike. So what is this? This is a decision made based on the sales, production. They have done the good quality of product they have produced, and now it has sold. So and the demand is really high, and now so we are giving a better appraisal to this department. This is what, based on the information available, we have given the management has taken its decision, right? Now say suppose the product is not being sold. Okay, sales is very low. There's so much of money invested in already, and there's so much of product already kept in inventory. So what is it? We'll not be giving appraisal. We'll try to lower the price to increase our sales, right? So all these things has to be taken care, those decision making. Then is say suppose there is a lot of loss coming. Oh my god, what are all the expenses that we have incurred, that we have, oh, why the sales is so low? All these questions will come, right? So this will help you have an effective control tool and to do the budgeting and forecasting. Okay, my sales is going down. I have to do something. I have to bring it to increase of 20%. Otherwise, I'll be in loss from next year also. So this is you're doing forecasting. Okay. Next is providing accounting information to the user. Of course, as I've explained you, there are two type of user: internal and external. So internal users involved means which is within the business, within the company. Okay. And external are government, your the public people needs information. So we'll be understanding in the detail about this also. Similarly, see, whatever we are understanding is why we are doing, because this is basically the reasoning of performing, and the similar way same thing is the function, because why we are doing is these are the reason and these are the functions, same. Recording. Okay, this is preparation of financial statement. Now we were telling how we'll be using to user. Now one is legal requirement, which is basically comes from government. Now if you are doing sales, you have to have GST. Okay, if you're doing profit, you need to pay income tax. Okay, you have to have, if you're running a company, you have to follow company act. So all these rules and regulations, we have to maintain a proper books of account, prove them. Okay, this is the law and I have followed the law. This is company act law. Okay, let's see, I have implemented, and these are the records. So all the legal information is also done properly. If you have to file GST return, then how you will file? You have all the sales, the sales, the purchase, your input tax credit, how much you have uh, uh, recovered as a GST. You'll do the setup and pay back to the government. So all this, how much? There will be thousands, lakhs of transactions in a big organization. You have to trace each and every transaction, right? So that's why we have to be recording everything properly, accounting, so that you can, when required, you can do all the filings properly. You can present to the people, to the government, to the officers that we are following things. Communicating the financial information, of course, this is the primary. Now, I have told you there may be both internal and external, like management, banks, employees, government authority. Now, why should we be doing accounting? Same thing. Why we are doing it? Because we have to have financial information. It gives assistance to management. Of course, it replaces memory. This is a new point. What is a new point? If you're recording everything, you need not to remember everything, right? Then it facilitates comparative study. Now let me explain you a little on this one. Is, say suppose year one you have earned 50 crores, 50 cr. Year two you have earned 5 cr. Now question will come, why, right? Explicitly. Oh my god, how is my sale reduced so much? Okay, from this year to this year. This is called as a year to year comparative study. I will try to assess the reasons. Okay, why? So that next year, upcoming year, I can perform better. Okay, so suppose year one and year two, my electricity cost was 50,000 in year one. Second year, it's 75,000. Okay, then I will understand. Okay, why? Because I have opened a new office. Okay, okay. So additionally, 25K is the charge of it. So that you understand where you are spending your money, right? Assessing the reasoning is very important. Okay. Okay. So all these things are done in comparative study. Each type of income, each type of expenses assessed. Next is, of course, we have done in detail. All the tax authority needs this. Facilitate loans means, say suppose you have already have one loan, but you need 1 crore loan more. You need a CCC limit or maybe like that. So they will understand. Okay, they'll see your account. Which are you capable of paying this? How? What is the performance of your business? What is the growth of your business? Then only they'll give you loans, right? Now, evidence in court. Of course, evidence in court means you might be the same reason, like IT people have brought to you court. Okay, then you have to prove them, okay, no, I have paid all my taxes on timely basis, right? So all these things will come across, but proper accounts has to be maintained as per standards and law. Okay, then you have assistance in insolvency. What do you mean by insolvency? That you have become bankrupt. What do you mean by bankrupt is that you have your debts, but you're unable to pay them. You don't have any more money left. So in that case of events of insolvency, okay, then also it gives you assistance because you have proper account. You can prove things, and then this helps in the you have proper solvency act in which you can secure yourself further. And then you are, it of course helps you in decision and in partnership accounts. What is partnership account? If say suppose if there are five friends who have started the business, okay, all of them have invested 5 lakh each. Okay, now who will get what profit? How much asset each one will get? Okay, all these thing has to be distributed now among five partners, right? So, but how to do it? How much salary to be given to this? What is the share of profit? All these will be determined in accounts properly, which is called as partnership. And we'll understand this in detail. Now we have understood a lot of things about why we are doing accounting, what is the benefit, what is the use. Okay. Now we'll be understanding the limitation. Now it is not fully exact. Now let me tell you this is a very important word here, estimation. Say suppose you have purchased a computer. Very good example is computer only. The act says we have it life of the computer is 3 years. So if the life of the asset is 3 years, and so if you are on fourth year, so the computer value will show as zero in your books of account. But you are still using that computer because you have estimated this thing as 3 years. So the value of it has become zero, but it is still available and is useful if you're using it. So this is called as an estimation of the useful life. Sometime what happens, say suppose in December you are closing your books. Okay, you have your electricity bill. So you have to close your books and present is to management what is the expenses by 5th, but electricity bill you are getting on 15th. Then you will be estimating, oh, okay, previous month my bill was 45K. This month also I'm taking like that only. Provisioning I'm making. What is it? This is called as an estimation. It may come 70K actually. So your profit might reduce further. So all these things are what? These are all estimations because at some point of time you are not sure. So this is there. Then we have another point is window dressing. When we say window dressing, this is you have to understand this word means manipulating. You can manipulate the account. For example, you have purchased and you have got a bill for 10K, but you can manipulate and put another zero and you have made it to 100K. Now, what does this means? And you are showing that bill and you have got the payment of 100K. And so you have given to vendor 10K and remaining 90 you have kept. What does that mean? This is you are manipulating and doing window dressing. Okay, which is possible but should be avoidable. Now accounting ignores the price level changes. Price level changes means it always record, this is a very important word in this is historical cost. Always you will purchase some asset, the value may go up, right? But the accounts will record this asset only at a price on which it was purchased. Say suppose you have purchased a building for 10 lakhs in 1990. Now you are sitting in 2023. The value have become to 1 crore. But in books it will show as 10 lakhs only. This price level change or the value change will not be addressed in books because it record or statements are prepared at historical and cost. Cost word is important because the money you have spent it will record that much only, not the change in price. For now, sometimes we are doing fair value valuations. Nowadays, IFRS or Ind AS has come, so we are doing fair valuation. We are even coming to present value concept, which I'll be explaining you further later, wherein we are determining the value of things at present. Okay. So to an extent, this has been dealt by the accounts. Now, accounting ignores qualitative elements I've already explained, like skills or staff of an industrial relationship. Suppose you have very good relationship with people, and on the basis of which you're getting good work, you're getting clients, people admire you, they like your leadership, and you have good name. Because of your good image, people are buying goods, your sale is increasing, but all these things doesn't matter in accounting. Okay, it doesn't record these type of things. Now, unrealistic information. Unrealistic information is, you can the concept sometimes, that is like going concern concept. What is going concern concept is, it assumes that business will be there for an unforeseeable future. There is no end to it. Okay, so which is a wrong assumption. Maybe there is an end to, means the production is not happening properly. There is a strike in the amongst the employees, and there's a lot of legal actions taken, but all these will not be taken care by the accounts, and it will assume that it is going well, and it's a going concern concept is followed. So roles remains the same points that it helps in what is the role? It is maintaining records, it's assisting management, it's facilitating comparative evidence and course, tax liability, and raising loans. Now let's understand branches of accounting. First branch of accounting is financial accounting. What is financial accounting? All the financial information which we have. Okay, we prepare financial statement. First is profit and loss. Second is balance sheet. Often we prepare cash flow and notes to accounts. Okay, and there are other statements also associated which are relevant as per the management requirement. Cost accounting means this is mostly related to manufacturing. Okay, now how manufacturing is, first of all, what should be the price of a product. Okay, man, then costing is like what all um, means, how to control cost, right? This is for controllers. To control cost, we need to understand the cost accounting, pricing, controlling, all these related to products, operations, processes, the main business, the core business है, उसका accounting करना. This is called as a cost accounting, which is a branch of accounting which deal with recording the cost with an objective to ascertain, reduce, and control cost. Now, management accounting means it is first of all fund relating to fund, cost, profits. Okay, majorly like fund management. The main thing of management is to bring fund to fuel the whole organization, right? So that management accounting helps in making decision for management. Now we come to bookkeeping. What is bookkeeping? Now let me explain you about accounting and bookkeeping. Till the stage of recording and classifying, it's called as bookkeeping. Okay. When it comes to summarizing the events and interpreting is the main word, and communicating, analysis part. When it comes to analysis, then it is accounting. Getting it? When you are simply recording things, you are doing bookkeeping, you are maintaining the books, you are keeping it. When that book you start analyze, summarizing, and then you are interpreting and communicating the result, you are doing the accounting. Getting it? So this is a primary stage here, and this is the next step to it. Objective is just a systematic recording, but here we will ascertain the net result of operation. We'll understand what is the financial position, and we'll communicate the information to the interested party. This is a monotonous and a routine job, but this is more analytical and dynamic job. You have to analyze, and you have to analyze and take the decision. This could be performed by junior, but this is a senior staff person work. Okay, so we this is more likely to be mechanical. You don't have to put a lot of brain because no analysis is there. But this is a require an analytical skill and interpretation. It's clear. Okay, now we understand what is accountancy. Accountancy is simply a knowledge. Okay, you have to understand this as knowledge. It's a knowledge, whereas accounting is an action or a process. Okay, now when we do the accounting process, is carried on the basis of rules and principles framed by accountancy. So a knowledge is there, and you are applying it and doing some action. That is called as accounting, and here this is called as accountancy knowledge. Oh, you have accountancy knowledge, and this is accounting. Understood? Now, qualitative characteristic is that it is a reliable, means ultimately it replaces your memory. It records everything. So it is reliable to the extent if it is properly recorded. True picture is recorded, then it's give you perfect picture of the business. It's reliable. Relevance is it give you a relevant information for decision making. Understandability, its financial statements are presented in a manner that is that the user is able to understand. I've given you an example also for this one. It has to be understandable so that any person can understand and get relevant information from your financial statement and take appropriate decision. And you can do the comparative studies. We have done about the users. We'll explain you again about the uses of internal information is management. The employees, see suppose employee for salary, even they will do this employee provident fund benefit, whether employer is timely submitting their provident funds or not. Then what all, somewhere they'll be having ESOPs, that is the employee stock option schemes. So all these things they will give equity shares of the company. So if they are giving equity share, they should know the value, right? That you are giving us the equity shares of the company. So what is the value of that equity share? Now, external users are, of course, as I've told you multiple times, businessmen, investors who have invested money, creditors who have given you credit so that you can purchase and repay them a little later, government for taxations, consumer to understand whatever the fair price is given or not, and then public, of course public is how your running business is helping the economy, and researcher is for the research work. Let's go to next topic is double entry system. What is double entry system? It's a very important aspect to understand. That is, there are always two aspects. See, let me explain this you how it works. Whenever you purchase something, say suppose a simple example, furniture. If you're purchasing furniture, so furniture is coming to the organization. So you are paying, so what is going? Cash, or your bank balance will reduce. Okay, sorry about this. So your bank balance will reduce. So what is this? There is two effects. Okay, or you can say there is a double entry. One is coming, other one is going. Similarly, if you're doing maybe if you are doing some expense, suppose you are paying electricity, you are taking some services, again there is a cash going out. Okay, if this is called as a double entry system. Okay, so it's very important because there is always a debit and a credit, which you will understand, which is giving away one thing and taking one another thing. Like that, This is called as a double entry system. Like if you're purchasing raw material, then if you're purchasing raw material, then again you have to give your money. Okay. If you are so this is the basic thing to understand double entry system. So we have come across these. This is the both aspects has to be recorded. Okay, and it's a very scientific and complete system of accounting. So what all benefit we have? It's a scientific because it's logical. Then it completes your record of transaction. Arithmetical accuracy is ensured. Determine profit and loss. You have knowledge of financial position. This is the same thing I will be explaining you. We'll be understanding the double entry means accounting is the double entry system. So we'll be understanding detailed about it, how you're doing it completely recording, how arithmetical means 1 lakh is coming, so 1 lakh is going, so 1 lakh furniture worth has to come. So this is arithmetical accuracy is maintained. You can assess profit and loss because if you are incurring cost, okay, how have you used that services to produce revenue, all that get associated, and P&L is you'll understand your net profit and loss, understand your financial position, full detail of the purpose of control, which means you'll have complete control on your what is coming and what is going from the organization. To incur one means to acquire some resource, what resource you have to give up. You can do comparative study is possible, explain you how is that year on year studies is done. So this I've explained you already, so which is also facilitated in double entry system, and it helps. So all the same thing, that is ultimately accounting, because double entry system is a accounting system only. So here we have completed our session. Thank you. Thanks a lot for being a great listener. Hope this video helps you. If you like my video, please like and subscribe, and we'll come back with more videos. You start learning accounting well. You'll be having, if you're understanding this basics, this video will give you the vision. Okay, and then you'll have that eagerness to learn. The curiosity will come up definitely. Okay, so have a great day, and bye bye.